Hi, this is Florian Munch from Miningscout, and I'm here today with Brad Richards, CEO of Pasofino Gold. Pasofino is a Toronto venture exchange listed company engaged in gold development in Liberia. And yeah, we want to talk about the current gold price environment, what Pasofino Gold is working on, and why there's deep value for you to look into. So, hi, Brad. Welcome.
Yeah, Florian, good to be back on.
Yes. So, just tell us the basics about Pasofino. So new investors who have never heard about the story, what is it about?
Yeah, for sure. Pasifino owns 100% of the Dugbe Gold Project in Liberia. And the project is quite mature. It's been around for about 14 years. And it was managed by Hummingbird Resources, PLC, for a number of years until 2019, at which time Pasifino earned into the project and delivered a feasibility study in July of 2022. And it's how they earned their up to their 49%, and Hummingbird held 51%.
That changed, yeah. So just to get onto that point, yeah. So we have a couple of things. I think in a very positive gold price environment, and Pasofino had made yeah very good progress, and some things changed. And this Hummingbird situation, the ownership of the project, can you elaborate on that?
Yeah, for sure. And I'll get into some more detail about the project a little later on in the interview. But back in November of 2024, so almost a year ago now, Hummingbird got into their own financial distress, and they owned a operating mine in Mali called Yen Falila, which was a small producer of about 100,000 ounces a year, and they were struggling to transition to underground, and found themselves cash flow negative at that point in time. And they had just finished building an operating mine in Guinea called Carusa. And they again struggled through all the way through 2023 to commission it, and then 2024 to ramp it up to capacity, to the point where they Hummingbird ended up defaulting on their project debt to a Chorus Bank in Burkina Faso. And what happened in November of last year is the bank called event of default on their loan. And the bank already owned 40% of Hummingbird's equity. So they made a mandatory bid for the entire company and bought all of the other shareholders of Hummingbird out, and took the company private and basically took them down for defaulting on their loan. Now, they continue on to do their thing, under a private consortium of companies run by the bank, but they are still a 51% shareholder of Pasifino.
Yeah. So majority shareholder, but Pasofino now owns 100% of the project. That's important note. Yeah. We just have the biggest shareholder is a bank now. The second biggest shareholder is a Turkish group, also mining group. Yeah. So is that a disadvantage or an advantage to have a bank as a big shareholder?
I think this has proven to be an advantage. And I think initially, when we embarked on this, after the transaction occurred, there were a few bumps in the road because they had triggered a shareholder rights plan that we held. But we ultimately sat down and carved out what's called the Cooperation Support Agreement, whereby I didn't want our minorities to be oppressed. So we ended up entering into an agreement that really didn't give them control. We have a board made up of three of the former Pasofino people, including myself, and a board of three other people from the bank, from Nyoko Resources and Hummingbird. So our board has six members with no casting vote. So it's like a forced marriage. We have to work together to create long-term value and short-term value too in this gold price environment. So we've done that. In the agreement, we have a standstill agreement, as well as the board composition. They can't buy the company for 12 months without unanimous board decisions, and I can't sell the company without a unanimous board decision. And they have to fund their pro rata share of any financing we do for the next 18 months back in June, so October to October 26th, of any financing we do. So strategically, we're very aligned here because we both want to create value in the project. We want to get the feasibility study from 2022 updated to a bankable status so I can start to work on project financing very soon. And then we can look at making a kind of a final investment decision and once financing is in place. But to your point about having a bank being advantageous or disadvantageous, I think it's advantageous because it gives us the flexibility to allow them to come into the project financing, either in part or in whole, but certainly a lead order. So that's positive. And they have the financial wherewithal to do all of that. So I think it de-risks the project financing and de-risks the project generally. So I see it as a positive.
Yeah, great. And we've just, and I say we because I'm a long-term shareholder. Yeah, I'm constantly writing checks, and I believe in this story. Yeah, and full disclosure here. But that's for a good reason. Yeah. So I see many things like we've discussed some problems that have been dissolved, or we have a positive movement in that. But also we have a lot of opportunity. Yeah. So now with the recent 12 million financing, and you just mentioned the pro rata financing of the bank. So yeah, that gives us 6 million. Yeah, just from one strategic investor again. Yeah, and this enables Pasofino to step forward into the bankable feasibility study stage. Yeah, and the previous feasibility study, and I think it has to be highlighted that this is a advanced stage development project with multi-million ounces, and there is a feasibility study already, which we want to make bankable in this process. It will take some time, yeah, but in the end, I think it's the right steps to do because strategically, and you told me that the new exit strategy is not no longer necessarily selling the company, but building this asset. And you've built assets and mines in West Africa in the past. Can you elaborate on that? How do you want to build this into a mine, a producing mine, and earn money?
Yeah, absolutely. So when I got involved with this last December, the CEO of Hummingbird, who were in distress and going through their own transaction with the bank, asked me to get involved in Pasifino.
Hmm.
And it actually was had a negative balance sheet at that point in time. So I got my family office involved in it, and we invested just over $1 million, and I raised an additional $2 million into the project because I see the potential here and I see the deep value that can be created and extracted. But they also wanted to bring somebody in who had mining experience, but also mine building experience. And I've built 4 mines in my career. I've built one large operation in the Congo, Katanga Mining. I was one of the founders of, and also rehabilitated 2 mines in the Congo. So I've spent a lot of time sub-Sahara Africa. And I've also built a mine when I was the CEO of Avocet. We built the Anata mine in Burkina Faso. We sold a number of properties. We sold Houndé, which is now a big mine that Endeavour are running, and Tri-K, which is a big operation that Managem are running. And I also built the Octea mine, the diamond mine in Sierra Leone. So I have a lot of experience in this part of the world. And from a jurisdiction standpoint, everyone can read the news and read the press and what's gone on in some of the countries in West Africa. It's been difficult, geopolitically a bit unstable in Burkina now and Mali and Niger. But this is where this project has flown under the radar for so long because it was in the Hummingbird portfolio, because they and although the project was advancing, it went through a feasibility study. Nobody knew about it. And I challenge today feasibility study done gold project in not just Africa, but anywhere that is at this stage, but at this stage of kind of valuation. So my job over the past 8 months has been to try and educate the market about two things. First of all, the project, which has tremendous economic outputs, and will have even better economic outputs when we update the feasibility study, but also about Liberia. And Liberia, and like you've known me for a long time, Florian. I've lived and worked in 9 countries in Africa, and quite frankly, this is probably the best jurisdiction I've ever worked in, and it's a very pro mining jurisdiction. The government is extremely collaborative when it comes to working with projects and companies in order to advance them. They've had a stable democracy since 2013, and there's a big U.S. presence here, a big U.S. embassy. So they do have it is secure from that standpoint. There's about 2,000 diplomats and expats here from America, and it is very immature in its mining history. There's I would say a handful, probably 8 or 9 Class A mining licenses, mostly in iron ore through the likes of kind of ArcelorMittal, Vale, Ivanhoe have just launched a big infrastructure project. And then you have the largest gold mining producer in Liberia called Avasaro. And so not only is the country, has tremendous mineral endowment, it's just known, underdeveloped, under the radar. And this
Yeah.
is part of our challenge is to update the market as to not only how good this project is, but how good this country is to have a project like this.
Yeah, yeah, that's very important. But what's important for investors is also how much value is there. Yeah, and what I see recently, so we have a tremendously good gold market. It has been running over $4,000 an ounce. Yeah, at the moment, pulling back a little, but we have a level. Yeah, that is so much higher than the years before, and this ultimately it increases the value of the project so much. So you have a presentation slide. Maybe we can show this here for viewers. This talks about the sensitivity analysis. Yeah, what happens with higher gold prices to the payback period and so on. Yeah, and the net present value. Yeah, and as you should do, you have like in the presentation like conservative numbers. Yeah, so right now the current one highlights 2,700. So you have like already very good numbers at 2,700 gold. Yeah, but we are now at 4. Yeah, and I think
Mhm.
viewers, listeners, investors should make their own calculation. What happens with $3,000 plus in an environment where we actually are at to the net present value and the payback period. So this is a project that is highly financeable.
For sure. And when I look at, where the gold price was, I can go back 2 or 3 years and how difficult the capital markets were to raise money in 2021, 2022, as a result of some of the geopolitical instability, some of the wars around the world, et cetera. And certainly a lot of geopolitical instability with the changing of the presidency in the U.S. that has had its own dynamic on the gold price. But I'll just go back to when I started here with Pasofino in December. The gold price was $2,500, and I had a call from somebody back, a few days ago, because last Friday, as you recall, the gold pulled back, substantially, like 5% in one day. $240, I think, was the pullback, and there was people, almost in panic, and I'm like, you really like we've had a
Look a
run
year
of
back. Yeah.
yeah, exactly. We've had a run from 2,500 to $4,200 gold in the past 9 months. And quite frankly, to have a little bit of consolidation and move forward from there. And we saw it consolidate on Friday, Monday, and Tuesday, of this week. And now we're still over $4,000. What a great place to be if this is the consolidating point and the march upwards. And everything I read, everything I listen to indicates that gold is going to strengthen for the next 1, 2, 3 years as a result of not only the central banks buying, but I think it's probably the U.S. dollar um, potentially going down the road of not only devalue but losing kind of the reserve currency to something that may well be gold backed. So I'll say all of the planets are aligning to have a continued strong gold price environment going forward. But how does that translate into our project? As you said, when we did this project, we can in 2022, excuse me, we constrained the pits at $1,600, and we ran the mine plan on $1,700 whittle shells. And it was an okay project then at $1,700. It had a post-tax NPV of $524 million on a $435 million capex. And I would say over the last 20 years, this delivers a 23% post-tax IRR. Over the last 10 years, that would have been a project that gets built all day long, and without a doubt. Now, over the past few years, project financing has become much more difficult, but now you start to accelerate, the gold price environment to where we are today, and we'll probably use 3,000, maybe 3,100 as far as our gold price assumptions. But just apples for apples comparison on a sensitization to the previous feasibility study, and we actually think we can make it better, more optimized, and potentially higher recoveries. We're talking about a post-tax NPV of over $3 billion. And when I look at how companies should be valued relative to and not theoretical scoping studies, but actual feasibility studies. History tells me we should be trading at 0.2 times post-tax NPV, and 0.2 times, $3 billion is a $600 million company, whereas we're trading at $75 million today. So potential for
Even
some
if it's
deep
half
value
that,
creation.
yeah, it's not close to being half of that, yeah. So it's a
No,
fraction,
exactly.
and in the current, and I'm a gold investor myself, a resource investor for a long time, and I see deep value here because we have exploration stories out there, based on fantasy, yeah. They have a very good system of gold, yeah, and they are going to drill it, and their fantasy is to have 1, 2 million ounces, and we already have 3, 4 million ounces in a definitive feasibility study stage. It's
Yeah.
ridiculous, yeah. And this valuation with 60 something million market cap. So if anybody wants to buy a lot like deep value and has some time, yeah, because this needs some time, and I want to close this interview with the outlook. Yeah, so this may need a year, 2 years, 3 years, eventually, yeah, to put the right steps in front of us. Yeah, so it's not going parabolic from just now to tomorrow. Yeah, but there are clear defined steps, and I would like you to just explain to investors what's the plan for the coming, like next year and ahead.
For sure. There's a number of catalysts that are coming, and they're related to what we're doing on the ground.
Yeah.
We are doing some infill drilling and some grade control drilling to, I'll say, make sure the reconciliation to the resource model is positive. More about cleanliness of a feasibility study that makes it bankable. We'll be updating, obviously, the mine plan. It'll be a completely new sequence and new strategy. We're doing, met test work to see if there could be the potential of introducing flotation in year 3 or 4 on a separate feasibility study on a separate capital project. But looking at should we be drilling out the resource from day one in order to support a 20 plus year mine life at over 200,000 ounces a year? Those are the things that the trade-off studies we're doing to not only increase the and optimize the economics, but to get a better outlook as to what the future could hold for a project like this that may well be generational. And I see, when we look at the margins here, and I'm conservative, I use consensus gold price of 3,350. This still has the potential to migrate from a valuation of inventory in the ground. And that's where we are today. Junior mining companies get valued on their inventory, or $20 in the ground, or
Theoretically.
and historically they used to be valued at, they used to be valued on the quality of what was in the
Yeah.
ground. So you'd get a premium, $180 an ounce for reserves, and you'd get $80 for measured and indicated, and maybe you only get $20 for inferred, but you get a graduated valuation. We're not even getting that today. And the market has changed over the past 4 or 5 years to where we are today, just raw inventory. But when you start to look at companies that are transitioning to operating companies, they're in construction, and there are peers that I can point to that are building mines in West Africa. Cote d'Ivoire comes to mind. There's a mine being built in Cote d'Ivoire, and that company has a $2.5 billion valuation. Why? Because they're migrating from a valuation on inventory to a valuation based on multiples of free cash flow, whether that's 3, 4, 5 times cash flow. Um, they're migrating to a valuation based on that. So the difference between where we are and where we have the potential to get to is, it's staggering. It's 40 or 50 times money in this gold price environment. And I've told you before, if we do this half right, it's still 25 times money. So this is where we see the deep value. Yes, there are catalysts coming. Yes, there's project financing, and you're right. This is not parabolic, because it's a 30-month mine build. It's going to take 30 months to build it
Yeah.
from June, July of next year. So it's going to take time, but what we see is this migration towards a change in valuation methodology to as we de-risk this project. So there just aren't many projects at this stage of development in this kind of category, and I think you and I both identify that there's something special here that can be created for shareholders.
Yeah, and we all know the Lassonde curve, yeah, with the exploration, a hype in the beginning, and then it goes down into the development. And I think we are just down there, yeah, where
Yeah,
there's the perfect entry point, yeah, because
yeah,
we transition from a late stage development stage company to a production company. It will happen. It should happen in the next years. And I'm looking forward to seeing that and to being in touch with you on that and informing our audience about it. So a pleasure having this interview with you today, Brett. Thanks so much.
yeah. Thanks, Florian.